Hi there, and welcome back to The Fuse Show. I'm one of your hosts, David Tran, and I'm also a co-founder of Xfusion.io. And today I'm joined by my guest, Ricardo Pero. He's a co-founder and CEO of SellersFunding, the all-in-one financial solution platform designed for growing e-commerce merchants. Thanks for joining us in the show, Ricardo.
Hi, David. Thanks for having me here.
So what led you to start a business in this industry?
Interesting question, and I tell this story quite often. You know, I came from a finance background. I spent most of my career working for like big banks, and in 2016 I left the industry, and I had two things in mind. I knew that I wanted to build something like a company from the ground up. Mm-hmm. I wanted to learn something new. But I also wanted to take all the years that I had spent in the financial industry and leverage that experience and bring that to my business, right? And for a few months, I ended up doing some consulting jobs here and there. And one day, I received a phone call from a friend of mine. He was a wholesaler selling through his own website. Decided to take a chance and start selling products on Amazon. Mm-hmm. He saw his sales grow from like $50,000 a month to $500,000 a month mm-hmm. within 3 months' time. And he called me and said, "Man, I need help. I mean, my budget, forget it. I need to reorganize my finances. I need working capital because we are growing and I don't have the capital. And Amazon charges a lot of fees, and I'd like to understand, and so I can plan better." I said, piece of cake, right? Working capital, Amazon, multi-billion-dollar industry, mm-hmm. e-commerce is booming. All banks must know about it. So I went there and went to the usual suspects, my former employers. And to my surprise, they had no clue about the industry. I mean, banks usually rely on like a very rigid credit underwriting process, right? And so they look at, FICO scores of all this, of the owners. They look at, receivables or physical assets that can be pledged to the credit facility. But when you look at the Amazon ecosystem and all these Amazon sellers, I mean, they usually start their businesses borrowing from their credit cards. So when is the right time for them to look for a larger credit facility? They are maxing out their credit cards and their FICO scores probably worthless. Amazon has some rules and restrictions on how sellers can reassign those receivables to a third-party company. So you cannot pledge your receivables to lower your cost of funds.
I see.
So in the end, you don't have too many options. The alternative to that, usually you have either some merchant cash advance options, mm-hmm. and the other player that you had in this space is Amazon Lending. But Amazon Lending, you cannot apply for a loan. You need to be invited.
I see.
So it was, very limited options. Okay. Then I thought, there must be something here. I ended up finishing my consulting job there. I spent about 6 months working with them. And then I said, I came back to them and said, I have this idea because if you guys who are experienced business people could not get a loan from a bank, I imagine that the thousands or millions of small businesses that are starting to sell mm-hmm. will have even a harder time trying to find a viable solution there. They look at me and I asked them, I need your help because I wanted to model and create a credit model that relies on sales performance. Mm-hmm. They look at me and said, "Cool. we understand what you're trying to achieve, but we are not. But kind of, we end up partnering together in the beginning. I hired a couple of data scientists. We used the data from my friend's store to start modeling stuff. His younger brother became my partner. He's the CTO of the company, co-founder. And that's how we started. We started actually funding with our own money. And it was a very interesting time of our life when we were kind of exchanging PDFs via email. That's how we started, literally. And when you fast forward, we now have a company that is fully digital. We end up evolving as a business, as a company. We realize, okay, Amazon is the biggest marketplace and represents about 50% of online sales in the US. But you have, e-commerce is much bigger than Amazon. And when you think about the life cycle of all our clients, there are two ways that they try to differentiate themselves and try to grow, outpacing the Amazon presence, right? They usually try to search for ways, especially the guys that are building their own brands. Once they reach a certain level of sales, they start looking for ways to diversify away from Amazon, right? So they go to BigCommerce, Shopify, all these omnichannel platforms. Walmart recently has been, I would say, the fastest growing alternative marketplace for most brands that we work with. So we are seeing that, and what we did was, in an effort to help our clients to have a better understanding of their business and also consolidate their sales, we started integrating with all these different platforms. So in a way, when you look at Amazon Lending, for example, they look at the data and sales data that happens on Amazon. They don't have access to data, what's happening on Walmart or BigCommerce. And we have the ability to consolidate all this. So Amazon Lending has a maximum amount of $2 million. We have a cap at $5 million. So we work with brands that can, borrow more and they have a stronger presence outside of Amazon. And we brought that together. And the other thing was the international aspect, internationalization aspect of it. If you go anywhere, if you look at the Amazon ecosystem, any marketplace, US, Canada, UK, Germany, locals, they represent about half of the companies selling there. The other half are foreigners. And then I thought, okay, e-commerce is a global phenomenon. If I'm not addressing all foreign companies selling here, I'm going to be turning my back on half of the addressable market. So I had to expand our mindset, and that's when we start building our digital banking platform. So nowadays we have the ability to collect receivables in US dollars, in Canadian dollars, pounds, euros. We are going to Asia. We are going to other countries. So we are expanding our capabilities there quite fast. And I'm very happy with the results we got so far.
How did you know that this time was the right time to start a business like SellersFunding versus years ago or versus years down the line? Because I think idea is not as necessarily the most novel component, but timing is also super relevant.
Yeah. It's funny you mentioned. I think that timing is probably the most important factor for any startup to be successful. It's not technology. It's timing. I always thought that e-commerce would outpace retail sales. The growth was there, and we were witnessing that. If you look at, for example, a country like the UK, where logistics are, it's not a big issue, and you have a lot of the flow concentrated in the metropolitan London area. E-commerce used to represent when we started business. Used to represent about between 20 and 25% of retail sales. Mm-hmm. In the US, that number was 10%. So I thought, okay, retail sales are flat, e-commerce is growing, about 15% year over year. Mm-hmm. That was the trajectory that we were witnessing there.
Pre-COVID.
Pre-COVID. Okay. This is pre-COVID. So I thought, okay, if we continue that trend, we're going to see maybe in 5 years, we're going to see the US e-commerce industry doubling in size. Right? Mm-hmm. And that's a huge opportunity because it's mainly comprised of SMEs, small business. They don't have access to credit, and they will demand that. And that's how. And then COVID. After 2 years, COVID happened, and then my 5 years became 5 months. Right. So that was kind of being in the right place at the right time. But we are. I think that we did a good job. And let me tell you, after 2 years, we were growing. We grew like 300% year over year consistently since we started business. Mm-hmm. But at some point, I had some pressure from existing investors saying, "Oh, why don't you start diversifying to other industries?" Because we had good results. Mm-hmm. With e-commerce, but we were not maybe growing as fast as they wanted. And I said, you know what? That's our edge. That's where I think that we are positioned. This is a long-term play. We have this view. We have this conviction. Let's stick with it. And then I think we were right.
So when you're talking about your MVP of people, you were using your own money and you were like sending out emails and with PDFs. How'd you figure out how to do like lending as a lender starting from the ground up? Like how challenging was that? It
was actually because of my background. The last few years, the last 8 years of my banking career, I worked for JP Chase. Mm-hmm. Not necessarily in the credit department, but I was part of the risk management committee, and I learned a lot about that. So for me, it was kind of I saw an opportunity, and since then we've been improving and investing a lot in our credit underwriting procedures and our technology. And I always think that if you look at our Trustpilot reviews, customer reviews, you're going to see that a lot of our reviews are praising and naming their relationship manager or the person who helped them on board and so on. Because I think the technology is here to help us make faster and better decisions. Mm-hmm. But we need to keep the human aspect of it. And I invest a lot on that. We have a sales team that is extremely engaged in supporting our clients. And look at all the things that we did from technology perspective. We recently start offering a free dashboard where our clients can look at their financial statements. They can look at P&L, they can look at margins, mm-hmm. They can look at the contribution of their sales across different per product or per segment. This dashboard is called Seller Signals. I mean, some of our clients used to pay to have that view to pay different software companies to have that view. Now they have that for free in our dashboard. So, because I think that providing that support to our clients to make better decisions and having a better financial education to manage their business, in the long run, will be mutually beneficial for them and for us. Right. So we see ourselves as more as growth partners than lenders per se.
I see.
Yeah.
So as a growth partner, when you're getting started, you are putting your own money at risk. I'm assuming knowing that you could lose technically all of it.
Yes.
Okay. And how do you know how to build the appropriate credit model, since I'm assuming you're building one in-house?
It's at the beginning, it's trial and error.
Okay.
Yes, there is no. What happened when we built the model was we started lending in November 2017. From November 2017 to February 18, we pretty much lend money to anyone that would be barely eligible, because we were looking, the right credit model. If I start lending only to people that have stellar performance, I don't know if my credit model based on sales will work or not.
It's true. Yeah.
So you lend to as many people as you can. And then after you have a number of existing loans, you're going to start monitoring. You're going to see if the model that you build has some adherence to the performance. And that's how we did. So from November to February, we lent to November 17 to February 18. We lent to everybody that knocked on our door. We learned our lessons. Then we now let's look at the results and let's start working on improving the model. And in March 18, we launched the first version of the SellersFunding app. That was already a digital experience for our clients to apply and get funded. So it's all it comes in waves. It doesn't, there's no secret sauce. You need it's trial and error, and then you need to improve and make tweaks here and there to make those improvements. If you look at today, we have more than 30,000 registered users in the platform. And a good percentage of those users, they share their data. So we have daily data supporting or feeding our models. And because the model is all based on sales predictions, like future cash flow prediction. So we need that data to support our decision-making process. And I think that we are in a very good spot. The results, every time that I talk to investors and I look at ways, as a lender, my crusade is always have the lowest cost of capital possible, so I can extend that benefit to our borrowers, right? And when I share the results of what we achieved so far, people are really impressed. I would say it's something that I'm proud of, and I think that our clients are benefiting from that too.
Earlier, you were mentioning how due to COVID, 5 years of digital transformation has shrunk it down to 5 months. Now that we're where we are today, what do you see as the new 5-year projection? Or what is your predictions about the future of e-commerce now?
I think that we're going through a structural shift from retail, from brick and mortar to e-commerce. We are here. Now I think that we're going to continue outgrow traditional retail, but things will. We won't see the growth rate that we witnessed in the last 18 months or so. I think this year we're going to see strong growth still, but it's going to start to, and this whole shift also created some negative impact in other industries, right? If you look today, all our borrowers, all our clients are having issues with the supply chain. Right? And so there will be some adjustments there. But I think that e-commerce still, it's going to outpace and we're going to continue to grow. And probably, I would say in 5 years, I wouldn't be surprised if we are, half of retail sales or 40% of retail sales are happening online.
So you just mentioned the disruptions to the supply chains. What do you feel like are some of the underappreciated challenges in e-commerce logistics?
Oh, it's the challenge that we are seeing. It's kind of, if you look at and maybe deviate a little bit about the supply chain issue, but it's more it's something that is way bigger than supply chain. It's how people react to this pandemic, right? We grew our team from 25 employees to 120. Extremely hard to find talent these days because people, they are reevaluating their priorities in life, right? So some folks, they decide, okay, I'm not going to work, or I'm going to take a part-time job that I'm going to work remotely, and that's it. I don't need that. I don't know what's going to happen with mankind in 5 years. So why should I bother? I don't know. Some people think like that. And when you look at the supply chain, it's not that manufacturers don't want to provide the goods.
Right.
It's that they are facing challenges with safety for their employees. They're facing challenges to get new workers to go to those factories, right? And I think that the entire ecosystem is not only related to e-commerce. I mean, the relationship between manufacturers and consumers will and buyers will change, and is changing. And I remember that, when I was in business school and before that in my undergrad, there was always, this fear of what automation in factories can cause to unemployment rates. There was all that discussion, and look, I think that if we had more automation, it would be positive for us right now because people don't want to go to factories to work, right? So this is, we completely deviate, but it's something that is broader than e-commerce, it's broader than supply chain. I think that we are all reevaluating our priorities in life, and we are all looking for ways to work from home. Like we are having this call, we were just chatting that we have the flexibility. We must have that mindset of offering this flexibility to our employees, and this is happening everywhere.
How has COVID, I guess, led you to reevaluate your priorities, or were you doing that prior to COVID? How did COVID affect your your queue of priorities?
It changed. It changed a lot. If you look at priorities in life, I went through a very rough phase during COVID. I ended up getting divorced. It was something that wasn't expected, but it's kind of, I'm probably not the only person that that went through a rough path in their relationship during COVID, and I know a lot of folks that end up getting divorced or went through a rough path. It's tough because when I look at my values, I build this business. Everything that I do for my children. That's my mindset. I think that I have this responsibility. It's not only. Actually, was talking about this yesterday. I think that I will die always chasing evolution. I think that I have the responsibility because I was given the opportunity to contribute to society in general. So I seek that constant evolution, and I have that mindset. That's why I don't see ourselves as lenders. I see ourselves as growth partners. I mean, it's kind of a reflection of that, right? And when I look at my personal priorities, my children, I have drawings of them, of them drawing me with the SellersFunding shirt in my office. And I went to spend the weekend with them. They moved to Brazil after the divorce, and they are there. I go to spend the weekend with them. It's important for me to have that time. They come to the U.S. and we spend vacation with me. So it's kind of we talk every day, and this is a priority for me. I have blocked in my schedule 30 minutes each day in the middle of the day just to check on them, and then we speak in the evening. So it's kind of, that's who I am. That's my but I was there, and I was wearing a SellersFunding hat when I arrived at the airport, and my daughter was there, and she took immediately the hat, put on her head, and said, this is mine. Bye. And it's kind of, they incorporate and they value that. I mean, I think that we, as a businessman and as a father, I want to lead by example. I was joking with my partner. One day we were talking about, why we work so well together. And I look at him and said, man, you know why I think that we work so well? I never met someone that I had the impression that worked harder than me. And he looked at me and said, I feel the same. So
I like that.
But yeah, because it is when you are in a relationship and a business or personal, that you think that you are giving more than the other. I mean, it creates imbalances, right? Thankfully, we don't have that here. I mean, it's not only that, but you look at our business, we have about 40% of our employees own a piece of the company. And the 60 that don't, they don't because they join us throughout the year, and they will get a piece of the company in the next bonus time, right? Because we promote that engagement. I mean, if you're not 100% bought into our view and into what we want to achieve here, I mean, you're not a good fit. And that's kind of, so it's a long loop to say, priorities and things. And I think that during this pandemic, everything got exacerbated. I mean, our priorities became really, this is going to be a priority. I don't know what's going to happen. I need to, to be happy. I need to deliver the things that I want to achieve in life, and I'm going to go and get those. It's fun. It was a fun ride. It's been a fun ride so far.
If you can instill just one value into your children, what value would that be? And it could be work or not work related.
This is something that I learned from my dad. Respect others, regardless of their, economic condition, their background, their, color, whatever. I mean, there is one. I always remember this I was about 6 or 7 years old, and he was driving me to a birthday party that was invited on the weekend. And we ended up driving into, I am originally from Brazil, so, and we were driving through a neighborhood that wasn't the same neighborhood that I used to live, or I lived at back then. Kind of more humble houses and everything. And I made a comment. I had a friend in the car, and I made a comment. I said something like, "Oh, I hope that the party is not in one of these houses," or something like that. My dad stopped the car, looked at me and said, "You know what? If it is in one of these houses, you should feel honored because probably your friend's parents don't have the condition that we have to throw a party, and they invited you, so you got to respect that." This is a lesson that I learned, and I was 6 years old. And I actually went to take my second shot, and I took my kids with me. And we were in line waiting, and I looked at them and said, "What are you seeing here?" They look at me, "What do you mean?" I said, "What you're seeing here?" Said, "A bunch of people." I said, "Do you see that we are all in line waiting to get a shot?" They said, "Yes." "Okay, what's the point?" Said, "It doesn't matter how old you are, how tall, how short, how fat, how thin, what color you are. It doesn't matter anything. In the end, we are all in the same line to get this shot. We are all equals." That's the message that we need to deliver, because that's what matters, right? Mm-hmm. If you have, so yeah, that's it.
I like it. Thanks for sharing that.
Yeah.
Well, out of respect for your time, I just want to say thank you. Thank you for joining us in the show, and I just want to give you the stage now for the people in the audience who want to know more about your business or follow you personally. What's the best way for them to do so?
Yeah, so SellersFunding.com is still the name. Like I said, we will probably make some changes next year. SellersFunding will be, if you don't work with us, take a look. We support small businesses that sell online. We support direct-to-consumer brands that sell online. Financially, we have a digital platform where we offer lending, we offer payment solutions to e-commerce sellers. I have my Instagram. I'm lousy at posting stuff on Instagram. Probably have someone in the team, in the marketing team, that needs to do a better job there too. And you can also find me on LinkedIn, Ricardo Pero.
Sounds good. Well, thanks again for your time, Ricardo.
Well, thank you.